Good morning. It's July 9th. I'm Kenny Polcari, and this is host of the party, Morning Market Commentary, everything you need to know. So, it was a risk-off day yesterday. It's a risk-on day today as markets remain confused as investors try to digest all the information and then make appropriate decisions based on where they think we're going. Whether it's the Fed, whether it's China, whether it's Russia, whether it's the Delta COVID, whatever it is, there's tons of stuff out there for investors to consider. So let's start the day and see what we need to know. Like I said, yesterday was risk off, and today it is absolutely risk on, right? The Delta variant, which are people are blaming the sell-off to, don't be so fast. There are so many other issues affecting investor psyche, right? Earnings begin next Wednesday. Expectations are running high, but we know that. What do we have for dinner tonight? We're going to have the soft shell crabs as we go into the weekend. Look, let's be clear. Stocks did not drop yesterday because of the Delta COVID variant, right? It's a convenient excuse. They dropped for other range of reasons. So stop the hysteria, right? First and foremost, think about stretched valuations. Think China and the tech grab and the threat to take Taiwan. Think Russia and the cyber attacks. Think OPEC and the oil supply. Think DC and infrastructure, taxes, free healthcare, free college. Think the Fed and inflation and interest rates, messaging and the dot plot. Think sinking treasury yields, suggesting a weakening economy. Think U.S. Justice Department formally charging Google with antitrust violations and suggesting maybe there's more to come. And now think about the Biden administration launching an all-out war on big tech, which I might argue could be bullish, right? Doesn't that all make much more sense rather than saying this new Delta variant caused trillions of dollars in losses to come out of the global markets yesterday? I mean, it's a convenient excuse, I get it. It's convenient to use the variant as the scapegoat, but let's be serious. There are so many other reasons for investors to have been cautious or to have a little bit of angst. So push the COVID variant thing aside. Come on. Stocks took it hard yesterday morning. An overnight analysis of the FOMC minutes caused the algos to go in reverse yesterday morning. European markets all lower. They were lower going into the opening by about 2% or so. U.S. futures were down by 1.5% going into the opening bell. You could feel the angst. And in some, you could feel the angst in some investors, yet you could feel the excitement in others, right? I say that because there's a whole bunch of people out there quietly, or not, hoping for that all-elusive pullback. Dare I even say correction. And by the way, I'm really one of those guys at the top of the list. Let's be clear. I'm not calling for a meltdown. I'm just calling for some sanity. And for me, sanity would be a nice 7 to 9% pullback. I'm just saying, maybe we get more. I'd like to see a 7 to 9% pullback, right? Look, I was on Fox News yesterday with Charles Payne. You can get that. I tweeted it out there. You can get the link on there. And we talk about this whole very subject about the pullback, not, and the buy the dip mentality, and when's it going to stop, and when are we actually going to see the market be able to correct? I, for one, like I said in the video, I want to back up the truck when it's right. In any event, the 10-year Treasury yield sank in the pre-open yesterday, hovering down below 1.3, trading as low as 1.27%. The VIX had surged by 20% in the pre-opening, right? And then as the bell rang, stocks plunged, right? They came under immediate pressure, what you thought was going to be kind of a tough day, but then at about 10:30, they found support, right? They churned for a bit, and they managed to take it all back. There was no panic. There was no sense of doom. In fact, it was all very orderly. And for those of us who had hoped for more of a push lower, we were once again forced to ask, is this it? Is this what I've been waiting for? By the end of the day, stocks had recouped half of their losses suffered in the morning, then just a bit lower. The Dow ended up giving up 260 points, or 0.75%. The S&P lost 37 points, or 0.8%. The Nasdaq lost 105 points, or 0.7%, and the Russell lost 21 points, or almost 0.9%. Now, in a show of real weakness, though, the transports got absolutely hammered. They lost 490 points, or 3.2%. It almost makes sense, right? First, if you're worried about an economic slowdown, then you would naturally worry about how the transports are going to do. Think train and air and rails and shipping. And secondly, if you're looking to raise cash, wouldn't you go to where you made the most, especially if you think that sector is also going to come under pressure? So going into yesterday morning, understand this, the transports were up 19% year to date, while the Dow, S&P, and NASDAQ were up about 13%, the Russell was up 14%. So, do you understand? So, money's going to come out where it was best, where it had best performed. And then yesterday morning, there was this rumor out there was some big asset manager that made a big negative bet on the market, taking a huge short position, suggesting, if you look at it in a vacuum, that they think the market's going lower, and this caused all kinds of analysis and speculation about who it was and why would they take on such a big position, giving the sense that they knew something that the rest of us did not, which is baloney. Look, that asset manager, if they are as big as they inferred, have a responsibility to their clients and their clients' assets. So taking a big short position would reflect nothing more than proper and effective risk management. You see, that asset manager is long the market across a range of clients' accounts. So if their analysis suggests weakness ahead, why wouldn't they hedge that position? Exactly. And to hedge it, they have to take on the opposite position to what they already have. Because as the market weakens, the longs will lose value, yet the shorts will gain in value, right? Thus, one offsets the other, protecting client assets. So again, stop the hysteria. And look, that was that asset manager's decision. He thought the market's going lower, so he's protecting it. He's right, he's wrong, who knows? But one way or the other, it's risk management. Now, the mood today is quite different, right? We've gone from risk off to risk back on. European markets are taking back much of what they lost yesterday, which was a little over 2%. They're all up by about a little bit better than 1% this morning. And U.S. futures are higher as well. The Dow, S&P, and Russell are solidly in the green and appear to want to take back much of what they lost yesterday as well. Dow futures up 150, the S&Ps are up 11, the Russell's up 22. The NASDAQ, on the other hand, continues to struggle and is lower by nearly 20 points. But you can credit the latest headline out of the White House for the weakness in tech and the op-ed in today's Wall Street Journal written by the former president, otherwise known as Donald Trump, about why he is suing big tech, saying if Facebook, Twitter, and YouTube can censor me, then they can censor you, and believe me, they are. It's a good read. You should just pick it up at the Wall Street Journal. You should just read it. Look, there's no economic data today that's going to drive the market, so the action is going to center around repairing some of the damage from yesterday, as well as focusing on next week when the quarterly beauty pageant begins, otherwise known as earnings. And yes, they are expected to blow the roof off the house. Estimates ranging from up 40% to up 60% growth year over year. And that also makes sense. Do you remember where we were at this time last year? Does shutdown mean anything to you? So the year over year comparisons will be dramatic for sure. But the market already knows this. Estimates are not a secret. So investors, traders, and analysts have already had a chance to incorporate them into their analysis, so I'm not expecting any significant surge higher on this news. In fact, don't be surprised if you see a bit of the pressure on stocks as we move through the months, just like we saw in April when the earnings came out. They were better. The initial reaction was to sell off before they stabilized and then moved higher. Look, I continue to think that the month is going to be a bit volatile and that you're going to get the chance to buy stocks at lower prices, but investing is dynamic. So if you're actively managing your portfolio, then you need to be in the game. But if you're a long-term investor with a broad plan that is well diversified and you've got an advisor that's helping you, then continue to invest your money on a regular basis. Sit back. You're good. You should eliminate the noise and listen to the music, because that's what it's really all about, right? Remember, when you change, and I keep saying this, when you change the inputs of any equation, then you change the end results. Valuations in the end will have to change. Risk parameters will have to change. Estimates will have to change, but they will change over time and not from Monday to Tuesday. So talk to your advisor. That's why he or she is there for you, to help guide you through this process and to help, eliminate the angst, right? This morning, the 10-year is still hovering at about 1.33%. The VIX is down 5%. Gold is up almost $4. The dollar index is down 10 cents, and oil is up 1%, trading at $73.70 a barrel. Holding right in there, like I said. I still think oil is going higher, into the end of the year. Bitcoin's flat at 33,000, Ethereum's trading at 2,100, and Dogecoin is up 4% at 22 cents. The S&P closed at 43.20 last night, after testing as low as 42.89, but still well above trend line at 42.17. I suspect that today you're going to see some digestion in the markets. Asset managers and investors prepare for next week. JP Morgan, BlackRock, Morgan Stanley are all out banging the drum, saying that global growth is still on track and earnings over the next 4 weeks will support the thesis, while the Fed and the ECB are implying that they will remain looser for longer. The outlook is positive and governments remain overly supportive and central banks remain dovish. All a recipe for higher prices, and that implies that the buy the dip mentality is alive and well. And yesterday's turnaround speaks exactly to that point, right? What we dropped. We didn't even drop 2% before they jumped in, right? The current S&P channel remains, as I told you, 4226, 4400, right in there. Anywhere within there is considered within the normal range. Nothing to get really worked up about. Remember, you know what you can do. You can text the word invest to 21,000 to get my digital business card. It gets downloaded directly right to your phone. Feel free to reach out, send me an email, send me a text, give me a phone call. I'm always happy to discuss markets, investing, nervousness, angst, or excitement, right? And whether or not you're going to back the truck up as the markets become more volatile and prices go lower. So what are we having for dinner? It's Friday night. We are in the height of summer now. It's mid-July. So what are we having? We're having soft shell crabs. Now the old adage says that you can eat soft shell crabs in any month that does not have an R in it. Thus, May to August is always the guide, right? Because every other month has an R in it. So there are many ways to prepare them, but today is this is going to be a simple, it's simple to make, and the sauce is also simple to make, and it's always a winner. So for this, you need the crabs. When you go to the fish store to buy them, have the guy at the fish store clean them and trim them for you, right? This way, then you don't have to worry about it. You need whole milk, you need flour, you need salt and pepper, butter, garlic, and white wine. And if you want to make them spicy, you could always add hot pepper flakes if you want. I don't do that, but you can certainly do it. Start by rinsing and soaking the crabs in the whole milk for about 30 minutes. Just let them sit in there. Then remove them, hold them up like this, let them drain a little bit, dredge them in flour, shake off any excess, and then set them aside. In a big, large non-stick pan, you want to heat up the butter and a splash of olive oil just so the butter doesn't burn. When it's nice and hot, take the crabs and put them down in the pan and brown them right on both sides so there's like a nice golden-y kind of crust. Remove the crab, put it on the plate. Right, you can put it like on a bed of arugula. You know, if you put a lot of arugula on a plate and then put the crab right on top of the arugula, it looks beautiful. Next, you're going to add the sliced garlic back to that saute pan, add a little bit more butter, saute it. Don't let it burn. Add about 3/4 cup of white wine. Deglaze the pan, reduce the wine by half, blend in, another dollop of butter, season it, stir it around so that the butter incorporates into the white wine and and everything that's left in the pan. Don't let it dry too much because that's the sauce that you need to put over your crabs. And so then when you think it's done, and it's not going to take you more than, the sauce won't take you more than 5 minutes to make. When you're done, just spoon the sauce over each one of the crabs that you've placed beautifully on the bed of arugula and serve, right? These you should serve individually. You wouldn't, you could serve, if you make a lot of them, you could serve them on a platter if you're going to have like a, dinner outside, or you're having lots of people over and you've got kind of a smorgasbord going. But if not, serve them on a plate individually. Have a big salad there, have, whatever else you like. I just like to eat the crabs along with a big salad. I don't put anything else with it. I always have a glass of chilled white wine, but it is summer, so you can have a chilled rosé wine if you want. I wouldn't drink red wine with this just because, it doesn't go. One way or the other, it is your call. That's what's so exciting about food. You can make it what you want. In any event, it's Friday morning. The day's about to get started. And pay attention, 9 o'clock, I will be live and in color on Stuart Varney on Fox Business. So tune in because I'd love to have you be part of the conversation. In any event, take good care. Have a great weekend, and I'll see you on Monday.